Rishi, this isn't the first time that Microsoft is dealing with a more strict FTC. Is this latest development sparking you to kind of change the risk calculus that you were embedding in your modeling for the coming year, or are you mostly brushing it off?
Yeah, and thanks so much for having me. Look, I don't want to say I'm brushing it off, but I do feel like the potential impacts, we've been prepared for this. This is something that has been talked about for a while. And remember, I mean, Microsoft obviously historically under Bill Gates and later Steve Ballmer had gotten themselves in a little bit of hot water when it came to antitrust. But under Satya Nadella, it's definitely been a kinder, gentler Microsoft that has very much embraced interoperability, embraced co-opetition, and I think we see that playing out here. They obviously were very early to invest in OpenAI, and they've really gone all in on Gen AI, become an AI-first company. But you actually notice over the past several years, past several quarters, Microsoft has been diversifying, right? They've been building relationships with other vendors. At the same time, OpenAI themselves has been diversifying, where they have their own relationship with OCI, including with Stargate. They have their own relationship with CoreWeave, per the reports out there. And so it really feels like Microsoft is doing the right things to show that they're not abusing their position, in terms of the relationship with OpenAI. And I think it becomes tougher to make an antitrust case against Microsoft with the OpenAI relationship when there is that level of interoperability and the other competitors have these sort of similar relationships. You think about Amazon with Anthropic, you think about Oracle with Cohere, even Google buying DeepMind a long time ago, and that's a foundation for their AI efforts. So I think it's going to be a tough argument to make against Microsoft on the antitrust given all of these moves.
Rishi, it is interesting, though, when you think back to the inauguration of the current president, how many technology leaders, CEOs, founders were there, and many felt that we were coming into a different type of field for business. But will that be the case? Are any of these companies ever going to be able to do decent M&A again? Are any of these companies going to be able to dislodge the overall time investment that they have to make in proving they're not anti-competitive?
Yeah, look, I think we're probably going to be in a better environment for M&A. I think it'll be hard to get away with these sort of acquisitions that we saw maybe a decade ago or so of, Facebook buying Instagram and then WhatsApp and Microsoft making some of these big blockbuster acquisitions. But I still think we're going to be in a more favorable environment for M&A. And I think, there's going to be scrutiny on there to prove that there's power, to prove that, to maybe try to keep the big tech companies in check and in line. But I still think that the idea of splitting up companies, divesting assets, that's going to be more unlikely under the new administration. To me, this is kind of just a continued show of wanting to keep them again in line.
Rishi, how do we reconcile the fact that President Trump has really almost anointed certain tech companies to be the shepherds of AI competitiveness here in the U.S.? You have Oracle, OpenAI as part of the Stargate deal. Could that shield the companies that have stakes in those particular companies a little bit more from, some of the FTC scrutiny that we're seeing? Or will we see kind of this broader scrutiny across tech overall?
I think we're going to see broader scrutiny across tech, as opposed to at least over the past, or at least relative to the first Trump administration. But I think it'll be equivalent to what we saw during the Biden administration. And maybe taking that one step forward, I do think very much there is a relationship angle to all of this. So I think your instinct in the question is accurate, right? That companies that have maybe ties to the administration, in some way, or at least work constructively with them, are going to be a little bit more protected. And so I think it's in a lot of these companies' interest to at least have a good working relationship with pieces of them. But remember, the FTC is its own independent entity, right? And they, even if the chair is appointed by the Trump administration, the way they act should be fully independent. Again, I think that the case comes down, especially for Microsoft, to prove that there's some sort of competitive harm, to prove that they are abusing their position, that there are antitrust concerns. And the more work we do on that, the more we see the moves that both Microsoft and OpenAI are making independent of each other, the diversifying, the embracing of interoperability, the harder I think it is to make a case for antitrust here.
So, Rishi, we then return just more broadly to fundamentals. For the software companies that you cover at the moment, Microsoft being one of them, but you cover a whole host. I think of Box, I think of Salesforce, I think of Oracle. Software hasn't been as punished as hardware, but we are reevaluating our previous winners, Rishi. And at this moment, do you think that we're hitting a bottom after the sell-off of this week?
Yeah, look, I think this big sell-off that we've had over this week and really in software over the past month, you're right, hasn't been punished as much as the hardware names. But there's been a lot of names that I cover that are high-quality businesses down 30% over the past month on really no fundamental news. In our mind, it is creating some really great buying opportunities. I think, some of the big guys like Salesforce and Intuit, I think, are interesting here. Even going a little bit more down the cap spectrum, I think HubSpot, which is actually a competitor to Salesforce, super attractive name, down 30%. It's one of our favorite names here. MongoDB, which I look at as the next-gen Oracle in the database space, really compelling, with this 35% drawdown that we've seen over the past month. So I do think it is creating some buying opportunities because remember, software, let's see what happens with the broader macro environment in the economy, but software is very much a tariff-proof sector. And I think that's an important point to keep in mind as you think about all the rhetoric around tariffs and trade wars.